Bitcoin hitting $1 million. Ethereum breaking through 20,000. At first glance, these numbers sound like clickbait fantasy. But what if I told you some of the most powerful names in global finance are betting on it? Stay with me, because by the end of this video, you'll understand exactly why these targets are not just possible, but potentially inevitable. But first, make sure to like this video, subscribe, and turn on the notification bell so you don't miss the next deep dive. This one could change the way you see crypto forever. Let's go back to 2010. Bitcoin was trading at under 10 cents. People laughed at it. Mainstream media called it a scam, a fad, a joke. Fast forward just over a decade, and Bitcoin is now a household name, accepted by banks, funds, even governments. If history has taught us anything, it's that betting against Bitcoin has been a bad idea. Now, let's zoom in on the numbers. The current market cap of Bitcoin hovers around $1.2 trillion. For it to reach $1 million per coin, we'd be looking at a market cap of nearly 20 trillion. That's the size of the entire US GDP. Sounds crazy? Maybe. But so did a $1 trillion crypto market back in 2015. And yet, here we are. What's fueling this next potential leg up? Three things: macroeconomic shifts, institutional adoption, and a fundamental shift in how people store value. Inflation isn't going away. Central banks continue printing money, and smart money is looking for shelter. Bitcoin, with its fixed supply of 21 million coins, is becoming the digital equivalent of gold, but more portable, more secure, and easier to verify. Now, let's talk Ethereum. While Bitcoin is dominating headlines, Ethereum is quietly eating the internet. Every DeFi app, NFT marketplace, and tokenized asset, most of them run on Ethereum. Its transition to proof of stake was a turning point. Supply issuance is now deflationary. And with ETH 2.0, it's designed to scale massively. Hitting $20,000 per ETH isn't just speculation. It could be the result of simple math. Let's do that math. If Ethereum captures even a fraction of the traditional finance world, think derivatives, insurance, bonds, that's a multi-trillion-dollar market. Multiply that by a fixed or shrinking ETH supply, and you have a recipe for a supply squeeze unlike anything we've seen. But there's more. BlackRock's spot Bitcoin ETF is just the beginning. Fidelity, ARK Invest, VanEck, all are lining up. Billions are already flowing in. If pension funds, sovereign wealth funds, and global asset managers start allocating just 1% of their portfolios to BTC or ETH, we're talking trillions. This isn't retail-driven hype anymore. This is institutional capital with a long-term view. Still think 1 million per Bitcoin sounds like a meme? Cathie Wood doesn't. ARK Invest's base case has BTC hitting 600,000. Their bull case? Over 1.5 million. And they're not alone. Former Goldman Sachs executive Raoul Pal sees Ethereum hitting $20,000 within this cycle. His logic? Network effects. Metcalfe's law. The more people use the network, the more valuable it becomes, exponentially. The charts tell a similar story. Bitcoin's historical cycles follow a pattern. Explosive rally, brutal correction, long consolidation, and a halving-fueled rebound. Right now, we're past the correction. The next halving is coming, and with it, the potential spark for a new all-time high. Ethereum's story is even more compelling. Staking has locked up a massive portion of supply. The merge turned ETH into a yield-bearing asset. And every time the network is used, ETH is burned. Less supply, more demand. You do the math. Let's pause here, because if you're watching this and wondering how to act on this information, there are a few easy ways. If you want to buy Bitcoin or Ethereum with low fees and secure custody, I recommend checking out BitGet or Scalable Capital. Both are available in Europe, have strong reputations, and offer solid affiliate or cashback bonuses. I've linked them below. And if you're not just looking to invest but want to learn how to build real wealth with crypto, join my free newsletter in the description. We break down the best opportunities each week, from altcoins to early-stage projects. Now, back to the thesis. What most people don't understand is that Bitcoin isn't competing with fiat currencies. It's competing with bad monetary policy. It's competing with central banks that devalue your savings. And Ethereum? It's not just competing with Visa or MasterCard. It's offering an alternative to the entire financial operating system. Think about that. Ethereum isn't just a coin. It's programmable money. It's the backbone of decentralized finance. It's the platform for NFTs, gaming, identity, DAOs. And as regulation begins to catch up, we're seeing clearer frameworks, more institutional involvement, and a growing realization. Ethereum isn't going away. It's infrastructure. Let me ask you something. If you could go back to the early days of the internet and invest in the protocol layer, would you? Because that's what Ethereum is. Meanwhile, Bitcoin continues to prove one thing. It is the hardest money ever created. It's unconfiscatable, uncensorable, and borderless. It's what gold wished it could be. And as the world grows more uncertain, economically, politically, even environmentally, Bitcoin becomes a beacon of stability. And here's something most people miss. There's a psychological component to price targets. When Bitcoin hits 100K, media coverage explodes. At 250K, it becomes the smart money trade. At 500K, it's seen as inevitable. And at 1 nanos, it's too late to get in early. The time to act is before the world believes it's possible. Ethereum has a similar story. Once it breaks 10K, the narrative shifts. It's no longer just that altcoin from 2017. It's a core asset in every digital portfolio. And institutional investors won't want to miss that train. You're probably wondering, what could go wrong? Of course, regulation is a risk. So are protocol bugs, black swan events, or macro shocks. But the trend is clear. Each bear market flushes out weak hands. Each bull market brings stronger conviction. And each cycle leaves us with higher lows and higher highs. So let's wrap this up. Are Bitcoin at 1 million and Ethereum at 20K guaranteed? No. But are they within the realm of possibility, based on fundamentals, adoption, and macro conditions? Absolutely. And the biggest risk? Not volatility, not hacks, not headlines. The biggest risk is doing nothing, watching it all unfold, saying I knew about Bitcoin or I heard of Ethereum back in 2025 but never acting on it. This is the moment to decide whether you'll be a spectator or a participant. Smash that like button if you learned something. Subscribe for more Real Talk content. And don't forget to check out the broker links and newsletter below if you want to go deeper. The future of finance isn't coming. It's already here. The question is, are you in?